You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the Option Block.
All right, everybody. That rockin' bit of tunage means it is time to rock out once again with everybody's favorite bi-weekly option show. Yep, it's time for the Option Block. My name is Mark Longo from the OptionsInsider.com, the brand spanking new. The Options, and it's a few months old, I guess I could say now, but still, to me, it's brand new. Hopefully, you guys are enjoying it, liking what you're seeing over there, making the shows front and center easier for you guys to find. Of course, all the other great content still there. It's just a new coat of paint and some cool stuff behind the scenes as well. TheOptionsInsider.com, the place to go. And, of course, find us on all your favorite social media platforms, everything else. At Options on most of the places you like to go. Maybe I think we're The Options Insider on Facebook as well. Don't ask me why. It seems like most of you like Twitter and stock twits and all that stuff, and you like the immediacy rather than Facebook, which is a conversation for another day. And also helping me to have that conversation today. It's going to be a fun one. Let's start off. We haven't had the last dad of Krypton on in a little while, so let's welcome him back. Mr. Trey Jarrell holding down the Fidelity hot seat today. Mr. Trey, welcome back to the show, sir. How are things in Fidelity land?
Going very, very well, yeah. Glad to be back. I've just been busy scaring hurricanes off the coast of Jacksonville the last few weeks. But hopefully I've scared the last one away and back to regular schedule.
Well, that's what Kryptonians can do, right? They can just fly over there and just blow it away, right? They don't need to mess with hurricanes. They just huff and puff and it's gone.
That's exactly how it went down.
There we go. I expect nothing less from the last dad of Krypton. And moving on out there to a little provincial hamlet near Chicago that's never afraid of hurricanes because they don't get them. It is St. Charles, where we are joined once again by Uncle Mike TOSAW from St. Charles Wealth Management. Almost said Wealth Advisors. Uncle Mike, welcome back to the program to you as well.
Yeah, I have to say, of all the things that I fear, hurricanes in St. Charles is definitely not one of them. Floods maybe at times, but definitely not hurricanes. Great to be here, Mark. Excited about the show today.
Yeah, should be a fun one. And last but not least, we don't know if he's excited, if he's bitter. He is up there in Maine after all, so they're a little bit different up there in the far hinterlands of society. where we are joined by the Rock Lobster, Mr. Andrew GIOVINAZZI from OptionPit.com. He's already giving me umbrage. The show hasn't even started, and he was giving me umbrage before the show, listeners. Let's see if he's taking off his cranky pants here. Mr. Rock Lobster, how you doing today, sir?
Not only have I taken off my cranky pants, but I figured out where the mute button is for the, I don't know, what are we doing the show now, 10 years? 9 years?
Not quite that long, but it's been a bit.
I just want to know that, I think 7 or 8 years. Just to the Fidelity guys so they know, and I know they're been around for just a short while, but it does take a while to really learn how to use that mute button. I'm just letting you know.
Yeah, we figure the average is about a decade for people to learn how to master it properly. We need to send Andrew just a big, giant red mute button. Huge one. He can't possibly miss, and it lights up so that he knows when he's muted and when he's not. That's what we need to do to work around. So, yeah, you Fidelity guys, they're mere babes in the woods. They have many years yet before they learn how to fully master that mute button. Meanwhile, let's see if we can master these markets. It is time for the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, where we break down what the heck is trading. Seems like the market's getting a little bit spooked over the weekend, and we're kind of reflecting that in today. A mild sell-off, not a lot, certainly given the extent of some of the issues over there in Saudi Arabia over the weekend. You might have expected a little more, but again, we had a little bit of time to digest that. Most of the major indices off. Let's see, the S&P off and the NASDAQ actually off equal percentages right now, off a little bit more than a third of a percentage point to the downside. The Dow leading the charge percentage-wise to the downside, off about 0.5%, because we all know you guys all love the Dow. At least the media seems to. Traders don't, but the media loves to quote it because it's got a big point value, so it sounds sexy when you can say off 1,000 points. And, of course, gold and oil. Oil, the big story today. WTI north of the 60 handle again. Haven't seen that in some time. Up 7.5 handles today, 13, almost 14%. That's a big move out there in WTI land today. So, unfortunately, no TWIFO today. It would have been a good day to break it down. But we did just do a pretty timely episode with some oil market makers out. So check out our most recent episode of of TWIFO. It's on the network feed wherever you're listening to this. Just go to the show before it, and you'll find out there good old TWIFO, and that should hopefully put you in good stead, because it's been fascinating. For a long time out there in WTI, people have been asking us, and people have been looking for, hey, what could possibly be this bullish longer-term case for crude? And it really has been a hard time materializing out there. Whenever there's a lift, even these market makers have said it, whenever there's been a little bit of a lift, a little bit of a pop, the market collectively has just taken that opportunity to just crush the life out of all the calls out there and all the call skew and all the vol, because it was their opportunity to sell it. You don't get many of that. And so they were fading pretty much every rally. We'll see if this may have a little bit more teeth to it. Some structural damage to the Saudi infrastructure. There could have some longer-term ramifications for global crude production and the energy markets going forward. We'll see if this is the thing that finally changes that WTI call skew a little bit, or maybe if we go back to the limp, quiet, sad old days where it kind of just slowly winds itself back down due to the longer-term overarching concerns about global demand and things like that. Speaking of what things, all these sell-offs today, going to give a little bit of a lift to vol, but not a ton. We're threatening the 15 handle, about 1485, 1490. So that puts us up about 0.75 of a point from last show. Our old friend VVIX also still hovering around that century mark right now. It was at just threatening, really just a little bit over of 100 coming into showtime. It's pretty much where it is, about 100.5. That puts it up about 5 handles from our last show. So getting a little bit of a lift, but not a ton. And VXX, given the fact that vol's back in the marketplace, still kind of unched. All right, let's go back around the horn where we went. Let's start with the last data, Krypton. Mr. TREY, sir, in these kind of interesting, maybe spooky start to the markets here, what are the folks slinging over there in Fidelity land?
Yeah, I think as we go through the list today, you will notice a theme here, and that theme being the crude news that you mentioned.
Let me guess, the theme is going to be Beyond Meat. It's going to be all about meatless products today, right? That's the theme?
All Beyond Meat today, of course. But, of course. Pretty much our whole top 10, right? We have Apple and Roku popping up in the top 10 here, which we both of those coming up in the news this week, so still some popularity there. But besides that, pretty much all energy names, here across the board. The top one that came in from the energy space here was Chesapeake Energy, ticker CHK. trading today at $2.07, up 29 cents. And Fidelity customers kind of taking an opportunity to maybe sell a little of the name here today. We've got about 60% sells to 40% buys. But, chart on this stock had been, pretty ugly for the last year, high of around $5, really just a steady downtrend. A little bit of a comeback here at the beginning of this year, but pushed down further. Year lows of around $1.25, but nice little jump that it's had here today. Still holding this longer term downward trend, but below the 200-day. But option market fairly interesting here as well. This is a name that's trading about 40,000 contracts on average per day. Today, more than double that, just over 90,000 right now, with obviously a couple hours still to go. And most of that on the call side, too, about 75,000 calls to 15,000 puts, so just under a 5 to 1 call put ratio here. And call buyers, really leading that charge, about 39,000 call buyers on the ask versus about 18,000 call sellers here. So kind of interesting, interesting activity. It looks like the option market may be a little bit more bullish than the Fidelity customers here, but the other couple of names that popped up here, another, as I mentioned, quite a theme throughout the day. The other name that popped up, usually not in there, is BP. Today up $1.48, just under 4% here right now. So another chart that's not been too favorable here the last few months. Right, hit highs back in April of this year, and really been trending down. Right, from 45 to a low of around 35, 75. Started to come up since then, but today's action, up that $1.47 that it's at now, pushed it back up above the 50-day moving average, sold off a little from the beginning, still, again, holding below some of those longer-term, trends, holding below that 200-day moving average. So still a little bit of ways to go, but nice boost here in the stock today. Fidelity customers here also taking this opportunity to sell. We've got about 79% of the trades in BP are sells compared to about 21% buys here as well. Option market, very interesting here in BP. So this name, average daily volume last 90 days, just under 15,000. Right now at 204,000 contracts. So big volume today in the option market here for BP. Heavy on the call side, about a 10 to 1 call to put ratio right now with 185,000 calls. Call sellers actually leading the other way here, right? About 74,000 trades off the bid in the call side versus 65,000 bought on the ask. So very, interesting options activity there as well. Another couple of names that popped up on the list here today as Fidelity customers had some interest in these 3 times leverage and inverse, DWT, which is a 3-time inverse here today, which is down about 40%. Here on the news, Fidelity customers actually taking this opportunity to buy. We've got about 82% buys versus 18% sells, and on the other side, that long crude 3 times long crude UWT up about 40%. Fidelity customers selling on that one here, about 70% sells to 30% buys here. So kind of interesting action. Those 2 names definitely not ones that usually pop up here as well. One last one I'll bring up. This is one that I don't think I've ever seen on the list here before. Was ticker WLL, Whiting Petroleum, actually pulling into the top 10. So the crude theme continues. Stock coming in $11.40, up about $3.86 here right now. So Fidelity customers are a little bit more split on this one, about 46% buys to 54% sells. Here right now, a little more even than some of the other ones we've seen. Option market a little bit split here as well. A name that usually does about 10,000 contracts per day. Last 90 days, up over 50,000, with about 29,000 of those coming from the call side here as well. Stock. All these charts look so similar, right? Just this long downward trend. Finally getting a little bit of a breather. Here today, pushing back up. This one at the 50-day moving average right now. So still, longer term, right? All these names still in that, downward trend. Need a little bit more of a push to maybe break those, but certainly an area we'll be watching as well. All these 3 of these names. One thing that I always find a little bit interesting to mention here is just looking through the IV30 numbers on all of these. So we IV30 across the board up on all of these names, looking at the option market here today. So we always have that kind of general, look at implied volatility. Hey, market's up, vol's going to be down. This is one of those cases, obviously, although these names are up, trading up, vol's up as well with that additional uncertainty. So, we always have these, kind of little rules that we place. We got to remember with volatility, though, not always going to be the case. We're going to get those up days where there's a lot of uncertainty where we see vol up as well. But kind of the interesting other theme I noticed across the crude markets today. But that's what I had. That's what a Fidelity customers were looking at here in today's trading.
So again, nothing but beyond meat there in Fidelity land. Meat alternatives dominating the tape over there in Fidelity land. Mr. Rock Lobster, with all these meatless alternatives lighting up the tape, is that what's obsessing the folks over there in the land of the pit as well? They starting to turn their attention to maybe some OIV, even though you can't really trade it, but you could watch it. And of course, things like USO and maybe some of these crazy levered ETPs that Trey was talking about. What's lighting up the tape over there in the pit land today, sir?
You know what this is? So there's a couple things. What's lighting it up is a lot of the pitties are happy that they closed a lot of their short vol on Friday.
You don't call them pitties, do you? That's horrible.
No,
that's the worst thing I've ever heard.
I call them students.
Okay, I can call them crazies, but if you call them pitties, that's a little bit beyond.
Yeah, I think pitties is not a very good name. So we're just gonna, Kyle, you need to scratch that. So I think there's two things I find odd today is anytime in the last 20 years have you just said, like, Iran bombed Saudi Arabia's oil fields and oil is only up 10%, I think you would have been like, what?
Well, that just shows how weak it's been. It takes a lot to move the freaking needle, and even this only budges at 10%. Isn't that crazy?
And the thing is I'm like, I guess the market gets complacent. Every decade, you got a new decade of young guys that are on Wall Street, in their mid-20s to mid-30s. They don't really remember an oil squeeze. They don't remember geopolitical risk, stuff like that. I don't know. After 30 years of trading, I guess, which makes me really old feeling, I've seen a bunch of these cycles. I tend to think that this is very early in this cycle. So, the fact that oil is continuing to go up today, and the market's really not doing anything, I think it's because it's like waiting for some kind of news. VIX is only up a little bit, but barely more than the weekend. So the VIX future is only up a little. So this is a very early time. But I think, like, geopolitically, this is really a significant thing. But the market doesn't care yet. And I've seen that in the past where it doesn't care. And it might not. But if it doesn't care, we should have back to the 13 for VIX. So it's starting to bake in a little bit more of a potential move either way. As far as oil goes, I guess we're way over $60 now a barrel. I got to look at my CL. But even up to, like, not long ago, you could buy December options in oil. I think we talked about this last week or 2 weeks ago.
Just last show, pretty much, or the show before. You're right. It's been an ongoing theme.
It's like insanely cheap. It is not that cheap anymore. And now the vol is actually starting to pick up a bit. I saw December is only up like 4 points. The short-term stuff has actually picked up something, but I mean, you got a $1.60 move today, and the October strangle is starting to get there, right? So what's funny is you can buy an October straddle that's just covering today's move, right? So the OCT 13.5 straddle is $1.60, right? And we're up $1.60 today alone. So, I mean, can everything sort of like, okay, Saudi production can come back online after a drone strike or whatever in a week? Does that mean, why don't we go back to $11? So, like, from a realized vol point of view, or just like relative vol, I don't think they're pricing this move very well yet. But the fact that the U.S. can now produce a bunch more oil, has the capacity, we don't have to import oil if we don't need to, that's clearly keeping a lid on things. But if we have like another one of these incidents, what's to say another one can't happen? So I don't know. I think the fact that this actually happened is it's a major. I think personally, it's a major, macro whatever global step. Because I think Iran's getting squeezed. They're the likely culprit. I don't know if they did it or whatever, but they're getting squeezed. So the market is not pricing, I don't think, this vol properly, but at the same time, nobody is bidding it up. I think it's relatively inexpensive where we are and all the stuff that's going on. So I would say that as far as vol goes, just because even the local moves are still enough where, you can justify buying some juice pretty easily. We got the Fed coming out on Wednesday. Saudi Arabia just got bombed, their major production facility, and VIX is 1478. So
gotta love it.
If you would ask me a year ago, if those two things were happening, VIX would be here, I would say no way. So either everybody believes that the U.S. economy is impregnable, or everybody just has a short memory on how things can kind of spiral. So anyway, that's the tack I'm taking. I think just kind of being long vol of vol is not a bad thing right now. And I'll leave it right there for the listeners.
The Saudis have been looking for a way to make cuts for a while. The Iranians have just helped them out. They were just being good neighbors. You need to cut some production. We'll help you. We can help you with that. See, it was just a misinterpreted gesture on their part. But you're right. It's been one of the more fascinating things for me to watch unfold as we've been doing TWIFO for a while now. And just to see over this past year, the continued weakness to the upside of crude, and any blip up there is very short-lived. And who knows? You're even saying right now, this seems to be maybe underdone, not quite baked in yet. The full extent of the damage. Again, we don't know the full extent of the damage, but the satellite imagery certainly doesn't look good. So anyone who remembers back to the Gulf War knows how challenging it is to put out some of those oil fires. So interesting things going on there. Mr. Uncle Mike, from your relatively safe haven of St. Charles, Illinois, sir, what is lighting up your tape in these somewhat strange markets we find ourselves in today, sir?
Yeah, it's something else, and we don't have any oil fields in St. Charles. Not just yet, anyway.
Be thankful for that, or the Iranians could be helping you adjust your output as well.
They may. But yeah, I do. It is definitely appearing to be a new era of oil when we don't get as much movement in the VIX or in crude or in silver or in any of the things that typically go way up when we have an event like this happening. I mean, if you look at silver, for example, it's up 3% on the day, even when it is in a very volatile time over the course of the last couple months. So I think that's one thing, and I think the fact that, like what Andrew was saying, we have the ability to produce the oil in America now like we have not in years past, definitely does play a big factor into that. Now, the other thing with which to consider is the fact that we actually have, a Fed announcement coming up. And I think that in a lot of ways, markets tend to, a few days before Fed announcements, especially one that's going to be pretty, I think this one could move the market for better or for worse. A lot of people do like to sit on their hands as best as possible when something like this is happening. In the futures last night, I think we were down roughly 25 points at one point with the S&P futures. And so when we have that kind of movement before the market, it's obviously lower volume, and I think that things are getting somewhat back to normal. Not back to normal, but somewhat more closer to a meh market for the time being. I'm definitely waiting for Wednesday, or excited to see how the markets move on Wednesday when we actually see this Fed announcement. So definitely something to watch. And the other thing to consider is that sometimes markets don't digest things rather quickly. One of the things that, and this goes back historically to 1906 with the earthquake in San Francisco in 1906. If you read Remnants of a Stock Operator by the story of Jesse Livermore's trading life, it was one thing to where he describes how when you have a catastrophic event, the market might not take to it right away. Sometimes it does wait, it digests it, and then the real move happens a little bit later. When you combine that with the Fed announcement coming up later this week, and this could be an interesting Thursday and Friday. Looking forward to Thursday's show to discuss all this and to see how the market reacts to it, as well as today's show, of course.
You can never look ahead when you're in the middle of the show because it's so exciting right now, Uncle Mike. You can't even get beyond. We still have so much more show to do.
I can't contain myself. I'm thinking Thursday and today. I mean, this is like excitement overload.
It is. It's like every day on the option block is like Christmas Eve, and we're all 8-year-old little kids here, which is always fun. The market may be acting like a weird little kid here today, or depending on your viewpoint, I guess. We've already talked about how it seems to be maybe not processing everything fully yet, or maybe a bit underwhelmed. Either way, that's what we're seeing, at least from a broad volume perspective. We'll get into the individual names in a second. Nothing really lighting up the tape tremendously today. Coming into almost halfway through showtime here, we're seeing VIX not even at its halfway, its ADV, a little bit shy of 250,000 contracts. The ADV is about 530,000 contracts. SPY, a little bit shy of 2 million, about 1.8 million. The ADV is north of 3. So a little light there as well. SPX, 722,000, right around half of their ADV. They're about 1.4 million out there. The Q's 308, 605. So nothing really blowing the doors off. IWM at about 245. The ADV is 445,000. Different story though when you get out there to some of the single names, including some of the names that are on the list, as Trey may have alluded to, a few of them earlier, including Beyond Meat. Of course, I'm just joking. A lot of B names, though, today. Starting off at number 10, Baba, 96,000 for number 10. Number 9, Tesla, 100,000 even. Number 8, Microsoft, also at 100,000 even. So looks like Tesla and Microsoft jostling for that 8 to 9 spot there. Number 7, Amazon, $1.02 on the tape. Number 6, Netflix, $1.03. Strange bottom half of the top 10 today in terms of how close it all is. Number 5, AMD, usually a perennial top 3-er. Now number 5, 111,000. Telephone, number 4, 112,000. It's, in fact, the bottom 6 or 7, really, all very tight here. Then we get to number 3, Bank of America, starting to put a little distance there, 124,000. Number 2, the aforementioned BP, 204,000. And number 1 with a bullet today, Apple. But it's been a back-and-forth fight, BP versus Apple. BP was number 1 coming into showtime. About halfway through the show now, Apple taking the top spot again. But that could change again. If you like BP, stay tuned. We got more of that coming in the odd block. This week, kind of a light week for earnings. You got, Cracker Barrel, everyone's favorite. Cracker Barrel and FedEx on Tuesday. General Mills on Wednesday. And we do have some earnings move reports coming up here. It looks like Cracker Barrel actually pricing in a little bit of juice. Cracker Barrel is on the 17th, so tomorrow before the bell. Coming into this report, they're about 164 and a quarter. They're pricing in nearly $7. That's a beefy straddle. And in the past, I guess they've merited it. They've moved about $6.50 in past events. So Cracker Barrel, maybe a stealth source of vol out there. Interesting. Keep your eye on it. Adobe, they're trading $278.35. Wow, lofty for Adobe. They're pricing in nearly $11. And they've delivered $9.50 in recent events. So maybe some to keep an eye on there. Both of them outpricing their recent moves, I should say, a little bit. FedEx trading $174.10. They're pricing in about $720. They've delivered about $675 in recent events. So a little bit of overpricing there, a decent amount there in Adobe. So maybe still some nuggets of volatility to be found in here. And of course, check out the earnings season report as well. Meanwhile, it's time for us to check out what the heck's going on in these crazy markets we find ourselves in today. It's time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody. We've touched on it. We've talked about it. So we got to start there today, listeners. Kind of the big dog here in the odd block today is, I guess you can just call it a freaking call palooza, because that's kind of what it is. BP lighten up the tape. I don't care if you're at Fidelity, if you're in the broad market. Everyone and their mother seems to be slinging some BP today. Coming into this portion of the show here is trading $39.40, up about $1.50, nearly 4%. This is the name that's had an interesting year. A year ago, they were trading not too far away from where they are right now, 43 and a quarter So that puts them up about $4 from where they are right now, but not a huge move. And then to the downside, of course, they saw their nadir, like just about everything else, 36.5 or so around Christmas Eve. Actually, 35.75 was the low, which I actually think they actually threatened that recently. So they could have tested those lows again. Because after Christmas Eve, they rallied like most of the rest of the market, got up to about 45 again back in April before pretty much selling off again to where they found themselves very recently, 35.75, 52-week low, until, of course, this recent news sending them back up to the upside here. So go figure today. Got some call action out here in BP, and that's pretty much what we've been seeing. Huge blocks. It's funny how this kind of type of news, I think it would be a big macro event. You were seeing it reflected the most in individual names that are very obviously centered around what's going on in that region. BP, one of the biggest individual equity blocks, option blocks, this probably is the single biggest print going up today, are these SEP 41s going up tons of blocks throughout the day. The biggest one, 12,383 for 25 cents. These things are pretty tight, as you might imagine, because a lot of paper was going up. They were 25 at 26, then 10,000 more going up a little bit later for 12 cents. So prices all over as the stock's gapping and as the vol, of course, is gapping. Almost 4,000 going up for 22 and about 22.5 cents there. Above the offer, below the bid. Again, penny wide. Orders line in the book there. It's hard to read into the execution, especially when you got so many going up like you do today. Come into showtime, already 127,000 had gone up on this strike. Clearly, that was opening because the OI nowhere near that. As Trey alluded to earlier, this name does 15,000 a day, something along those lines, and to do 127,000 just in one strike, it's a lot of paper. Already today, they've done about 14 times their ADV, the lion's share of it, just in this strike. So, Mr. Rock Lobster, it's one of those, it's a tsunami of paper, so it's hard to pull out any individual print. We just kind of wanted to talk about it because there's so much going on in BP. All of a sudden, for today at least, the SEP 41s are like SPY at the money calls. That's how liquid they are. Apple, they're just lighting it up. Penny wide, 100,000+ going up. Who'd have thunk it in BP? So maybe this is where we need to look for the impact, Mr. Rock Lobster. Not in the macro, not in the term structure of VIX, which is, where you might expect to see it. Maybe not even in WTI, but in some of these more isolated independent names that are clearly feeling the thunder today. Any of you crazy slinging any BP today, sir?
We've just been looking at USO and CL. But this is substantial paper.
Yes, it is very substantial.
The thing is, so you've got a 10%, 3% change in British Petroleum. Why British Petroleum and not, Exxon? Right? Because you could be buying the SEP 20. I guess people are basically just speculating on this getting worse, and they're just going where more bang for the buck is, like in a what we'll just call a more vanilla diversified energy company. So there is like I would say heavy volume in let's say Exxon, and I'm sure it's some of the other ones, but the British Petroleum one definitely has. It is a standout purchase on 100,000, crazy amount, and I don't have an answer for it. It's just it looks like a cheap. Basically, I would just break it down into it's a cheap shot for options that could be worth some money. I mean, you got to the end of the week, but is there? When was the last time a major oil company was bought out? Like forever ago, right?
It's been a while. It's been a little while.
I think, was it XTO maybe, or maybe Devon Energy bought somebody, or I don't recall oil. I just don't recall the last time somebody ponied up for one of these things. I know there's a big collaboration. Somebody will probably pipe in, but it just to me just looks like a cheap shot. Basically,
so far, it looks like a lot of these, at least if they're lifting offers, which a lot of them were, they're looking pretty good. I mean, those SEP 36s for 80 cents Stock's 39, roughly 39 and a half right now, so that's looking pretty good. So some of these early scoops are looking pretty good. Some of the later ones, there could be obviously back and forth as well, so I'm sure there is people scooping them earlier in the morning, then getting the heck out of Dodge. So a lot of that could be actually up to 133,000 contracts on the tape on this one strike right now.
Yeah.
That single call strike for BP, Mr. Rock Lobster, if you put it up against our top 10, would be number 3. behind only BP itself, which is the lion's share of these calls. So yeah, it's outpacing Bank of America, AT&T, Tesla, Amazon, everything else. Just these SEP calls by themselves, SEP 41. That's how much paper is going up in just these. So if you want to get some action, maybe you're a little bored with the macro space, you want to find the hot strike where everybody's playing today. SEP 41s, clearly where the action is today, listeners. They're buying them, they're selling them, they're all over the place. OI looks like it was about 3,000 contracts and change coming into this. So clearly that OI changing hands many times. Looks like people getting some cheap flyers there, at least earlier in the session. Some of that appears to have worked out. BP may be settling down a little bit now till we see the second legs of all this playing out. But interesting stuff. Next up, we have another call, PALOOZA. I don't know if it's quite to the same magnitude. It's kind of hard to rival what we're seeing in BP today. But interesting nonetheless. A name we haven't talked about in a while. This is Dish Networks. Trading today, similar price level to BP as well, about 35, almost $36, up about half a buck, or nearly 2%, about 1.7%. This is the name that's had kind of a bit of a similar year to BP as well. Trading a year ago, not too far from where they are right now, about $37, and they sold off in Christmas Eve down to about 23 and change, 23 and a quarter or so is about their 52-week low. Then they turned right around and rallied. By the time we got to July of this year, they're back up to 43 and a quarter. Which their 52-week high was about 44 and a half. So it's like they kind of hit it around that time as well. Then they sold off again. Must have had some bad earnings again, 31 and a half around August. They were trading again, so shy of where they are right now. So actually, in the last few weeks, a month or so, it's actually been a bit of an upside story up here, swinging from about 31, 32 and change up to 37 and change, and then selling off down to about 35 and change where it finds itself today. So a bit of an interesting story, and clearly someone is out there on the warpath for some calls out here in Dish as well, doing some size prints, a bigger print. Actually, I take it back what I said before about the biggest print is coming in BP, because individual block prints, at least for equity options, I think these Dish calls have it. It was a SEP expiring on the 27th out there, so getting a little bit late in the month there. The 36 calls going up for 80 cents, 13,746 times. That puts it up about 1,500 more than the largest BP print. So not overall volume the same, but at least individual print-wise, Dish taking the crown today. 80 cents, close to mid-market, a little bit, about a nickel off the offer. They were 70 at 85 going up. This was opening, as you probably would expect. There are earnings coming up, and they are not in this cycle. They are November 7th, so this is not an earnings play. This is a straight-up Dish. Looks like upside call love. We saw more piling in, 1,200 for 65 cents, lifting the offer that time, 800 and change, going up for 95 cents. So these calls are moving around a little bit, as you would expect. Lifting the offer there again. A total of 21, almost 22,000 going up on the day on this strike. Looks like most of it biased towards opening upside buying paper. Mr. Rock Lobster, some interesting stuff going on out here. Looking obviously from the charts, you can see how there might be a little bit of interest, whether that interest is that immediate, moving up to the 36 strike by the end of the month. That's interesting. Maybe some takeover corporate action play at work here. What's your spidey sense telling you here for this Dish call PALOOZA, sir?
It is definitely it's odd. So like this is the Charlie Ergen. He's kind of like the old school tech deal maker guy. They own a lot of spectrum, and I'm just wondering that a Google or Apple or somebody else might want it. This guy has been cagey about that. I know, because the Dish, the network, the bundle, everybody's moving away from all that. So that has been pushing the stock down. Earnings have been, there's no bundle growth anymore. That's dead. But he's been using his cash flow to buy a Spectrum or Bid or some stuff like that for a while. And it appears that somebody thinks that all of that value is going to be unlocked. I don't know what the value is on their books. But it's basically a company with a lot of assets, and their major cash producing asset is all their network, and it's not, it's just not growing. But they've got all this spectrum. So I could see that this could be a buyout and then, a bigger company, and then he eventually becomes the CEO of the acquiring company because he's generally smarter than just about everybody else. It does look like just flat out takeover paper. However, these are pretty, I mean, somebody's actually paying money for these options. They're not a lot. It's $1.20 but $1.20 for 2 weeks in Dish. I mean, because it has been kind of a dog that way. So, and one thing too, the vol's up so much. I mean, they're taking liquidity out of the system without question. So, somebody's looking for something to go higher.
They are.
I don't know why they would try to sell a lot of stock against this type of position. It just looks like pure, and they're making money day one on them, which is usually a good sign.
Yeah, we're 2 for 2 on our call paloozas here, at least in the initial blush here, as the initial buying paper looks like it's working out. Let's see if we can make it 3 for 3. It is called the odd block after all, so let's get a weird one in there. And this one's pretty interesting. When you're thinking weird names, you're thinking, of course, everyone's favorite, International Game Technology PLC, ticker symbol IGT. If you're wondering what they are a multinational gaming company that produces slot machines and other gambling technology. Trading today, $14.35, off about nearly half a buck or nearly 3%. This is a name that's had an interesting run. A year ago, they were trading about $20, and they kind of slowly sold off to, they hit looks like their nadir actually was kind of recently. So down to about $11.32 was their 52-week low. That coming looks like around August 15th or so. So they've kind of long, slow downslide from 20 down to 11 and change. And then recently have rebounded, including most recently in the last couple of weeks. They were trading 11.5, 11.43 actually, back on the day after Labor Day. And they've rallied since to about 14.5 almost. So interesting times for them. Let's see what's going on in this name. Mr. Rocklops, you got a name that's sold off quite a bit. And then all of a sudden in the recent weeks it's popped. You think, what kind of paper do you think? Of course you think opening deep in the money call sales in April of 2020. Yes, that's what we got. 10,650 of the April 12 calls. So the stock trading about $14.34. These are clearly deep in the money calls, listeners. Going up for nearly $3, $2.92. Looks like it's about 12 cents off the bid. They were $2.80 at $3.20. So bid side. So we're going to lean towards sales. And then your first blush, you see this going up is, of course, maybe they got some house money on them and they're dumping them out. The stock did get to around that range, and so they're taking some profits. But nope, as I mentioned, this is opening over there on the Philly. Obviously, there's going to be a few earnings between now and April. The most recent is going to be October 31st, so Halloween earnings. Nothing inauspicious about that. So Mr. Rock Lobster opening in the money call sale on IGT. Is that the first kind of blush of paper that springs to mind when you see what the chart has been doing out here of late?
Yeah, this kind of looks like somebody, you bought the stock at 12 when everything was ugly. You get the quick pop. You sell the 12 calls for $3 and you lock in, what is that, $3? That's 25% till April. It kind of feels like that. I mean, used to see that all the time, just trading anything, people guys that are smart scoop the stock when it's in the basement, and then you get a decent rally and they just lock in a pretty decent return. And they're good on the trade, but it's a long time to tie up your capital, so you want to do it if worthwhile. And 25%, I'm going to guess that it would be hard for the S&P 500 to do better than 25% between now and April.
Bite your tongue, sir. You're offending Uncle Mike as we speak. The resident bull.
Except for the singular investment managers.
Yes. Speaking of singular investment managers, it's his time. It is time for the strategy block.
It's time to dispense options, wit, wisdom, and education. It's time for the Strategy Block.
Mr. Uncle Mike, these are the kind of markets, topsy-turvy, moving around, shaking upside one week, downside the next. People may be wondering, straight up small outright lots, maybe doing a little bit more size, but doing them in verticals. How do you make that difficult decision, sir, at St. Charles Wealth Management?
Funny you should ask, because that happens to be what today's strategy block is about. So let's go through this. Let's go through a scenario. I'm going to make the prices perfect and make everything simple, like I typically try to do, just so we can understand the concept of this. Let's say that you're bullish on a stock, XYZ stock, trading at $100 a share. And two choices that you like, you can either buy the 105 call for $1, let's say, or you can buy the 100-105 vertical, same expiration, for $1. The 100 call is trading for $2. The 105 is trading for $1. So you have the same risk either way by doing that. So in what case would it make more sense to do that? Or let's say that maybe you could buy a multi-lot 100-105 call. That's the other thing that we're going to explore today. But let's say that it's just even money, $1 or is what you can make, is what you're going to have to spend either way on this. So let's go through choice A, buying an out-of-the-money 105 call. If you do that, there's nothing wrong with that, so long as you manage risk well. Oftentimes people tell me that buying out-of-the-money calls will leave you out of money. But I say that if you manage risk in the right way, you can actually do it and have some success when trading out-of-the-money calls. Now, how can you do that? What can you do? How does that actually make sense? You have such a low probability. How can you do that? Well, the answer is a page right out of Andrew's playbook, and that is to do stuff. So let's say that the stock goes higher and you have this out-of-the-money call. Well, perhaps maybe you can sell half of your positions. And by doing that, you're locking in break even for the trade, and then you can let it ride. That's one way with which you can do it. Or you can turn it into a spread, meaning the stock goes higher past the 105 level, then maybe sell the 115 call and collect a little bit of income. So that way you have taken in some money, taken a little bit off the table from a delta standpoint, but you're also still in the game, so to speak. So that's one way with which you can do it. Now, let's say the market just goes straight down when you buy the out-of-the-money call. Well, if that's the case, then the way with which you manage risk, in my opinion, isn't necessarily a stop loss. I think it's just taking a small position. So with that, let's say you're buying some out-of-the-money calls and the stock goes down. If you just have a small amount of money on the table, then it's not going to hurt you that badly, and you kind of already have your stop loss in place already without having to do that. So that's another way with which you can manage risk by buying out-of-the-money options. Now, with that, if you go the spread route in this instance, meaning you buy the 100-105 call spread, your profit target is limited, meaning you're not going to make any. It's mathematically impossible for you to profit more than $4. And even then, it's very difficult to do that. You're going to have to wait till expiration if you want to get all $4, and it's above 105. However, with the 105 call, you have unlimited upside. So with that, which one is actually better? Well, I explained some of the benefits of the 105 call, just buying it outright. But what if we were doing the 100-105 call spread? Well, what I like about the spreads is that let's say the market goes lower. And when that happens, you can buy back that 105 call itself in the spread for a slight profit. And then all of a sudden you have a 100 call at a lower cost basis. Market goes back up. You can either sell the 105 call again, or you can just take some off the table with the 100 call. There's a lot of choices with which you can do. So the advantage of the 105 call, of just buying it outright, in my opinion, is that the stock can go up to infinity and beyond for all the Buzz Lightyear fans out there, and you can really benefit from it. However, with the spread, the benefit is that you have more opportunities for adjusting. Let's say volatility goes down. Well, you can buy back that 105 call and then wait for vol to come up again and maybe sell it again. If the market goes down, there's a lot of things with which you can do, and you have more choices with the 100-105 call. However, you have more potential upside by simply buying an out-of-the-money call. Now, let's say that you're debating, should I actually buy a one-lot 105 call? And if you're doing more than one lot, that's fine. Just multiply the contracts out. Or should you actually buy a 100-102 call spread for the same price, but now you actually have the ability to buy a 2-lot or a 3-lot in the matter? Well, that leads to some interesting thoughts. With having the 105 call, you have the automatic upside should we have a very far move or a large moving market. You still have the ability to do stuff as we described earlier, but not quite as much stuff because of the fact that you have just the single leg option in place. And you should have some money on the sidelines when doing this as well. Now, if you have a 2 or a 3 lot 100, 102 call spread, and let's say you bought it for $1, well, you have similar potential upside as you would a 1 lot 100, 105 call spread. But here's where one of the advantages comes in to really make this a lot of fun. Should the market go lower, you have the ability to buy back one of the 102 calls and wait for the market to come back and then maybe sell one of your 2 or one of your 3 100 calls that you have on the table. That's one thing with which you can do. And then by doing that, you're actually creating a lot more deltas without a lot of risk. That's one of the very exciting things that you can do with it. Now, with that, the thing that I want to emphasize on this is try not to get too smart. If you're trying to trade just for the purpose of trading, meaning you're adjusting too soon, it's not a wise decision. However, if that's the case, then you have some other problems to deal with. So what I would like to mention for today is that if you're bullish on something and you're thinking of doing a 1 lot, take a look at a spread and see if you can do a 2 lot for a similar price, and it's a potential alternative.
Thank you for that, Uncle Mike. We got a couple minutes, so I want to see if we can squeeze in a little bit of some listener mail with a little bit of the old mail block.
It's time to take your seat on the All-Star Panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, welcome to the Mail Block. This is where we get you guys roped in on the show. Got a lot of email and other questions here, including some through Fidelity. Also got some live. I like to give you guys some live love. Get a little shout out there in the chat room from T-Mouse. It's nice to meet you. Well, it was good to meet you, Mr. T-Mouse. We love to meet the listeners and the folks who, he's one of our regular listeners of TWIFO, tuning in here for the option block here as well. We love to meet you guys whenever we're out at different events and things. We hit mostly of the industry and institutional oriented events. We don't hit a lot of the retail ones, so we don't get a chance to meet all of you guys in person a lot. But when we do, it's always fun. So if you see us floating around at an event and see our logo, feel free to come up. A lot of you guys will recognize the voice before you recognize the name. That happens all the time. But we love to hear your feedback on the shows. That's always fun. So keep that coming. And turns out he's a corn trader from the corn mecca of Miami. Who'd have thunk it? So interesting stuff. Some of those interesting markets that pop up on our radar. Speaking of interesting markets, you know, Mr. Trey, this is that time of year where folks, maybe it's crude, maybe it's corn, we don't know, but folks may be dialing up the old Fidelity active trader strategy line, easy for me to say, and saying, hey, you know, I want to trade some of these markets beyond the traditional S&P 500. How should I go about it? Do I go the old straight up route, or perhaps do I go an ETP? What is your advice over there in Fidelity land, sir?
Yeah, definitely is one that's been coming up here. Got a couple today, actually. But in general, too, you know, over time, how do we actually take advantage of some different situations? If we want to trade options, should we trade it, you know, on the index? Should we trade, an ETP that maybe tracks that index, or even some individual stocks in the name as well? And I'd say, you know, every situation is going to be a little bit different. Some of the things that, I'd always like to point to here first, you know, thinking about, an index versus an ETP. One of the first things we want to think about is just the notional value that it controls. With an S&P, for example, you're trading about $300,000 worth of notional value on any one contract. Is that the type of value that you want to be controlling? You know, yes or no. If it's much smaller, a lot of times we might be able to find an ETP out there that maybe trades just a tenth of that, for example. We also want to make sure we're looking at, whether they're American or European, right? Our indices are, going to be European style. They're going to settle in cash. If we have no interest in actually owning or taking possession of the underlying, this may be an area where the index wins out. However, maybe we're, looking at an individual sector. When that expiration comes, maybe we want to take possession or hold it longer. Maybe the ETP is going to win out in those situations here as well. Last thing too, just keep in mind if there's a dividend as well, an ETP that, maybe pays a dividend, right? One other issue we want to pay attention to is, do we run into that, early, assignment or exercise possibility here as well, and how the pricing of that is going to impact us also. But, as always, no right or wrong answer, but, look into it. Look into the liquidity as well. In some cases, the index, may be trading, much more heavily. Some cases, the ETP may be. But it always takes time to do, a little bit of a comparison. And you may end up ultimately using some in some situation and a different in another one. But just a couple of things I like to bring up when that question comes up.
Thank you for that, Mr. Trey. Keep those questions coming. You can hit us up directly, of course, at Options, most of the major platforms. Our website, theoptionsinsider.com. Or you want to go through the Fidelity folks and hit them up with a specific question as well. We're going to start featuring more of these kind of Fidelity questions of the week here on the show. So get those in over there. Maybe, who knows, maybe you win some fabulous prizes. We'll see. All sorts of fun stuff in store. But unfortunately, that music means we come to the end of another epic sojourn through the world of options. So we're going to do kind of a combo around the block as well as what's coming up in the land of options. Let's start with the Rock Lobster. Mr. Rock Lobster, I know you're not feeling what the market's delivering today in terms of maybe perhaps an appropriate response. I think maybe more is baked in from a vol or from a broad equity perspective. So tell us what you're keeping an eye on for the rest of this week until we gather here together on Thursday. And then if folks are intrigued, they want to learn more, maybe they want to join your, what you call them, pitties, then by all means, where should they go? What should they do? That one's going to go back to haunt you, I think.
I have a feeling I'm going to be eating those pits. What am I looking at? Okay, here's simple. Can the vol futures finish up on the day when they bomb the Saudis? If they don't, maybe it's just like 22 or less VXX and 13 VIX by the end of the week, because it all doesn't matter because we produce so much oil, it doesn't matter. We'll look, but as of right now, oil keeps ticking up. So I think that has still taken over everything, and that's what I'm watching. Treasuries are still pretty strong price-wise. So I think this is like a wait and see here, I have to say.
Does have a bit of that air about it. If folks want to learn more, maybe they want to check out your thoughts on all this. Where should they go? What should they do, sir?
Optionbit.com. Mark has a new video on butterflies. I'm going to be doing a video on how to price trades so you can actually make flies perform with you in just 2 weeks. That would be a free webinar, so you'll learn how to do it. Go to optionbit.com and just right on our front page there, check out a blog. Also subscribe to my vol newsletter. And if you're listening to this show, I'll let you try it for a month for what the heck, for free. 1 month for free. And if you don't at least learn as much as it costs, we'll give you a money-back guarantee on the free subscription.
That's generous. That's not a bad deal, actually, listeners. So if you're intrigued by all this stuff we're always talking about, vol, term structure, movement, realized versus implied, erosion in BXX, all the good things that the Rock Lobster likes to break down in his newsletter, maybe that's the place you want to go. Optionpit.com is the place to go. Mr. Uncle Mike, maybe I'm tired of these markets. I don't get it. I want to wash my hands of it. I want someone else to watch them while I go fishing, or I hang out with my kids, or whatever it is I want to do. So where should they go? What should they do, sir, if they are so inclined? And also, what are you watching for the rest of the week?
Good question. So if you are tired of these markets, or you're not tired of them and you just want someone to help you manage larger sums of money while you trade your trading account, contact me at stcharleswealth.com. And in terms of what I'm watching the rest of the week, same thing I was watching last week, Twitter, 3000, and the Fed.
And last but not least, Trey, take it home, sir. If folks, they want to reach out to you maybe with some of these ETP-type questions, or they want to hit you up with some straight-up options questions, where should they go? What should they do, sir?
Yeah, send them all over to us, fidelity.com/options. Jump onto the website, learn a little bit more about our offering here at Fidelity. If you're not a Fidelity customer, that's a great place to learn. If you already are, give us a call. Ask for the trading strategy desk. Feel free to ask for myself. I'd love to talk with you about your strategy. But for the rest of the week, going to be keeping an eye on what's happening in crude. But aside from that, all about the Fed on Wednesday. What happens with that? I think it'll be an interesting announcement. Probabilities from that Fed cut have changed quite a bit over the last few weeks. So be watching closely and listening to the presser thereafter.
There you go. And if you want to kick the tires for yourselves over there in Fidelity land, sling yourself some options. Fidelity.com/options is the place to go. But you don't have to go far. If you're saying to yourself, I need a little bit more of this derivatives type fix in my life today, well, stay tuned. We'll be back in almost exactly an hour. You like some space that has a little bit of volatility these days? Yeah, it's crypto. And we'll be back with one of the big dogs in that space. Gemini is going to be joining us in a little bit, so about 57 minutes. So if you're listening live, stay tuned. Take a little break. Go have maybe some lunch. Be back in about an hour or so. Otherwise, if you're listening on, I should say after the fact, then by all means, just hit next on your device of choice. We'll be there talking some fun, implied vol, term structure, skew, all that good stuff in the land of Gemini as well as what the heck's going on with them, all their approvals, all their new products, what's going on in the crypto space. A lot to talk about. Otherwise, we'll see you back here. A lot of shows throughout the week. Advisors Options coming up this week. A lot of other ones coming up this week. OPR at its regularly scheduled time. Then we'll be back all here together on Thursday for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.